All right, everything looking good. We are live. Let's go ahead and get this party started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:02 p.m. Eastern Standard Time on February 22nd, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right. Somebody be so kind as to let me know in the chat everything's coming through loud and clear. In the meantime, we shall proceed. All right, so let's jump over here and get started with TNX. Okay, so we got the 10-year treasury yield right here, and this thing is behaving as expected. So we've been talking about this for a while. We basically topped out here in October, came down here, put in a low, came back up, put in a lower high, and then came down here and put in a lower low. Back tested the 200 simple moving average. We're looking for either the 200 exponential or simple or both, but the 200 simple in traditional markets always has favor, for me at least. So on the daily here, after retesting the 200 simple, we're in a very, very strong uptrend. The 200 simple is on top of the 200 exponential, so it means we're losing some momentum, but very often, more often than not, we'll actually come up here and put in a new high, even after we've lost momentum before the trend tops out. Alternatively, we could just continue higher. So that being said, we had some bullish divergence between our indicator oscillators down here, and then we were able to get multiple green histograms above the slope line. The slope flipped blue. We crossed above the zero line, and now we are accelerating to the upside. The bulls have taken control. We left the bearish control zone, got the hard buy signal, and now we rode the Stochs all the way up to the upside inside of the bullish control zone. And now we're starting to see a little bit, I don't even want to say we're seeing weakness, honestly. I mean, we're basically just going sideways as it continues higher, and the pink stochastic is very powerfully angled to the upside. And you can tell the strength of the move by if the pink actually makes it into the bullish control zone or not. So it flips red when the blue goes inside of it, but oftentimes on like a weaker move, the pink will never even get inside of the bullish control zone, aka above the 80 level. Here we see we entered here and it turned red, and now here the pink is entering as well, and the blue is basically just going sideways. So this trend is still on the shorter time frame, you know, not looking at the 200s on the daily, looking more at like the 821 and like the momentum. This thing's building up momentum, and we have now broken out from that previous swing high. So obviously what we look at is a high, a low, a lower high, a lower low. So the next thing we want to look at is, can we take out that lower high? Because now we no longer have a lower high here, we have a higher high. So eventually when this tops out, whether it comes back up and retests the top of the range, whether it rolls over back now, the thing we'll be looking for is, now that we have our first higher high, are we going to come down and put in a higher low eventually? And then that would be the start of, you know, basically we're in a bull trend, we go into a bear trend or correction phase, and then the resumption of the bull trend. And obviously the 821s flip bullish right here. And let's actually jump over really quick and take a look at the 210 spread here. So again, I'll pull this one up all the time. Here we are on the weekly, and we see that we have the clear resistance here in white. We have broken through that resistance, that long-term powerful resistance. And now here we are. The actual area we're looking for is, you know, obviously we can see the spread here in orange is the spread when they're postured correctly. But when they invert, the spread turns blue right here. So again, we can see the spread is staying wide or widening. And then also we see the 2 right here, because we were just looking at the 10, which is represented in the orange area. The 2, which is the blue right here, that is already basically breaking out to new highs or retesting the previous highs. So what that means is that yield is continuing to rise, which means suddenly the market is admitting, at least the shorter duration bonds, or treasury market is admitting that, oh, actually we were wrong. The Fed is going higher for longer, and now we're going to continue higher as well. So essentially that was the mispricing we've been talking about between the bond market and the stock market. And now we're likely to see that play out. So we'll keep watching it. We'll keep paying attention. We'll keep seeing what happens. But we know that whenever bonds are strong, yields rather, are strong, that is not good for risk on or equity markets. And obviously we know about the dollar as well. So let's flip over here real quick, take a look at the DXY. So DXY has broken down below the 200 exponential and simple. We were in the 821 bear trend inside of an overall bull trend. We see the 200 simple is basically flat. We even see some signs of it flipping negative. 200 exponential is already negative. So we're very close to confirming into a bear market. So the last bullish trade we often take is essentially the move back up to retest the 200 exponential and simple, or the reversion to the mean trade. We see once again higher lows on the indicator oscillators, lower lows on price action, bullish divergence, and then we're starting to get the pop now. We've moved all the way from the bearish control zone up to the bullish control zone. We haven't gone far with actual price action, but momentum is in our favor. So if we consolidate here at the 200 exponential long enough, we'll likely see the pop to the 200 simple. And then again, we'll start paying attention to, is that going to be a hard rejection? We roll over and go lower and we have a high, a low, a lower high, and then lower low incoming. Or are we going to break through this, consolidate, put in a higher low, and then begin moving back to the upside? Which honestly seems more probable at this point in time based on like fundamentals and everything. But technically wise, we have to really pay attention. What we want to see here, if you're bullish on the dollar or bearish on equities, what you want to see is just us consolidate at this level. Just go sideways here. And then eventually we'll eat through the sell orders and then burst up to the 200 simple. And I think that's the most likely path from here. We could easily roll over, see some weakness, put in a higher low, and then move up to that level. But eventually, you know, that seems like the most probable target. All right, so let's just jump back over here now to the major indices. We'll finish up. Let's look at oil really quick first. So we have this descending channel on oil. Then we break out. We have a nice little move up. Then we break back down into a descending channel again. Then we have another ascending channel right here. Then we come down, threaten that previous low, reclaim the channel, but we top out at the heart line, put in another lower high. And then again, we have broken down now from the support. So at this point in time, you know, one breakdown, shame on me. Two breakdowns, or no, wait, the other way. Shame on you. Two breakdowns, shame on me. I mean, you know, we have lost that area. So now really what we're looking for is, can we hold 72? If we don't hold 72, can we hold the lowest low of the correction at 70? And if we don't, if all that fails and Papa Crypto Trend Trader gets his wish, I mean, this is, you know, it's not even really my wish. I could really give a damn, but it's just more of a target. But seems likely now, you know, basically the macro on oil going down to negative whatever. No, I think I have it charted from like the last actual close. It's like, you know, super low. But regardless, if we look at the fibs up here, the blue ones, which is from that capitulation move, that's the all-time high right here at 130 roughly. And then we have the 236 right here. We hit the 236 in blue, we bounce, we break through it, we back test it as resistance. And if it holds as resistance, aka, you know, the same way we're back testing the 200s and they're holding as resistance, we're going into a bear market. You know, the next thing that happens is high, you know, low, lower high, lower low, lower high, lower low, lower high, lower low is next until it's not. So we've got plenty of lower highs and plenty of lower lows. So if you ask me what's coming next, a lower low, a lower low. So that's what I'm expecting. Could we come up here and put in another lower high first, take out this high, come up here, get rejected? Sure, it's possible, but it looks very, very weak. We're literally a couple percentage off of the lows. And again, this is why we were talking about this a little bit in the group today. It's so hard to try to predict short-term price action based on fundamentals, because everybody's been saying oil should go higher, oil should go higher. We were saying back here, well, momentum is telling us the bull market is on for oil. Oil is going to go higher. We wrote it all the way up here, you know, basically take profits on, well, we stayed in a lot of the actual like producers. But realistically, you know, take profits on the oil trade up in this area. And then we've been, you know, basically oil's been getting roasted ever since. And a lot of people are getting bullish, the most bullish in this area up here. So you got to be real, real careful. So, you know, there's still a lot of people that are overly bullish on oil. I still think long term, you know, it goes much higher. The producers are making, you know, record profits, you know, and producers, all the different oil related businesses, I should say. But that being said, we're testing the lows right here, and it looks like we're getting ready to break lower. So I would be very, very cautious being overly bullish in the oil trade at the moment. I mean, there's plenty of time where we could be bullish. It just looks to me, you know, and I mean, we've only been saying this for months, so it's not like some brand new like idea that we're coming up with. It looks to me on the weekly right here, you know, we have a beautiful trend to the upside. We have flipped the 200s bullish. It's game on. This thing is probably going into a multi-year bull market that likely leads to new all-time highs. I mean, shit, it almost already did. That being said, we flipped 821 bearish and we're in the middle of a correction. So that correction has been taking place since July of 2022. So anybody that's been bullish on oil since July of 2022, that's not like, oh yeah, I expect it to go much, much lower, like by down by minimum 20, 30, 40% before it goes higher, but I'm bullish long term. So that's okay. Anybody that's not specifically saying that, that's just saying like, I'm bullish on oil, is down substantially and looks stupid as fuck, because we've very clearly been retracing. So here we are at the 200 exponential now. So the real question is, okay, does this look like support that's getting ready to hold, or does it look like, or continuing to hold, or does it look like support that's about to break? To me, it looks like support that's about to break. We smash on it one time. You know, just imagine like taking a piece of drywall and, you know, putting a few cinder blocks down on the ground and then just laying the piece of drywall over the cinder blocks. Could you, you know, jump on it one time? Sure, it'll probably break a little bit. But if you jump on it, eventually you're going to break through the drywall. It can only take so much. Or like, you know, imagine a trampoline, but instead of like the jumpy, springy part, like whatever that is, vinyl on springs, just imagine it's made out of like wet paper. Okay, sure, maybe it could hold you one time, but eventually you're going through. So that's how it looks to me. Every time we come down here, we bounce a little bit less, a little bit less, a little bit less, and then we roll off the table and the bloody waterfall shows up. Now, it doesn't have to be some massive move here, but if we're at 74 right now, 200 simple is at 65.92, 66. I mean, that's the obvious target. So that's still like another, what, 10 or 12% down from here, you know, 10.6% down from here. You know, sure, we're printing some bullish divergence. We're showing some signs that it wants to reverse. But I mean, what would be more suiting? What is the most likely scenario is it should bottom. Sure. Everybody's predicting the bottom. Everybody says the bottom is in. And then we get a capitulation candle down to key support. And then the actual bottom maybe is in then. Maybe. But I mean, at this point in time, you know, it's hard to deny that this is the obvious place we're going. So $60 oil, here we come. You know, obviously, you know, that is like the top of the range right here, the blue box. The bottom of the range would be closer to like the blue 382. But again, we top out right here. We break down, test the 236, lower high, break down below the 236, back test as resistance, and then likely headed down to the next key macro Fibonacci support, which is the 382 in blue. We also have this clear white resistance slash support right here. So anywhere in that area to me is the ideal place to be scooping up oil. I mean, if it goes to zero though, grab some up at zero. You know what I mean? If you got some cash on hand or whatever, be like, yeah, just throw it in the backyard. So like 60 to 66 is the target. We're not going to get greedy, but we have so freaking much confluence right here at the 200 as well as that horizontal. And the truth is, the more confluence you have at a level, the more people are looking at that level. So if everybody's looking at the same support level, seems like there's at least a good possibility that we'll get some kind of substantial bounce off that level. Even if we don't go to new higher highs afterwards, or we go to new lower lows afterwards, at least get some kind of like tradable functional bounce. All right, so let's look at the Dow Jones, aka DJ Nasty. Not looking great over here. I mean, it's holding for now, but we talked about the scenario of basically a double top. You know, we basically have two tops right here. We have the neckline, which is represented by the 200 simple and in this case, exponential moving average. 821 has bear cross back down. This is the key support to hold. So we have a neckline support of, you know, a double top. We have the 200 exponential and simple. A lot of confluence at this level. We have, I mean, there's so much confluence at this level. So the truth is, this is the area you want to hold. But obviously, we've been looking at this bull flag, really pennant. And realistically, I mean, we have like a nice little lead leg in. Bitcoin had a similar setup on shorter time frames. We're consolidating inside this range, try to break out, and it failed. We rolled over, you know, call it the Fed minutes, call it, you know, whatever. The Marshmallow Man attacks New York, or a train flips over and, you know, we decide to control burn it because we don't feel like cleaning it up. Whatever the situation is that you want to say is causing this, I don't really care. We can see it clearly. We broke down from support. We're at some other support. Could any one of these be the bottom and hold? For sure. If we lose those levels though, I'm going to tell you real quick, the way the sentiment turned around when we were shooting to the upside right here, after like we were long in all our positions and everybody else was jumping on, you know, the hype train, the sentiment went from everything's going to zero to everything's going to new all-time highs. I told you I have been had the least confidence in these markets likely ever, but definitely like lately, because we're basically fighting to determine what the trend is going to be. And I'm going to tell you right now, the bulls were looking good. They were looking strong. There was a lot of tax loss selling that led to buying, that led to momentum, that led to options. You know, big gamma squeezes left and right all over the place. The shittiest shit went up. That's not usually how like a good market builds structure and goes higher. It's usually not like the trash that you like build your house on top of. Nobody's like, hey man, what are you doing? I'm like, oh, I'm getting ready to build a house. And you're like, sweet. What are you doing today? I'm putting in the foundation. And you're like, oh man, what are you making out of concrete? No, I'm building it out of hot garbage, just straight trash that I found all over. That's what I'm going to build the foundation of my portfolio from. That's going to be the, you know, big market catalyst that everything goes higher. A bunch of trash garbage companies that make no money. Oh, awesome, man. Well, good luck with that. I mean, that's basically what we're saying here. We're going to build the foundation of our portfolio on trash. We're going to build this market rally on trash. Yeah, right. Get out of here. Arguably, you could say that industrials, you know, and materials helped out a little bit. Sure. Okay, I'll give you that. So that being said, this is it. I mean, this is the key area that's got to hold. If we lose the 200s again, it's going to be very, very clear to the market that this was basically some reaccumulation after tax loss selling, distribution, and then we're going to go lower. So likely we're going to at least come down here and test the lows again. So we're talking about like sub 30K. Dow again, you know, down another 15%, retesting the lows, you know, all the momentum, all the hype, all the excitement, everything, just, you know, slaying the dragon. I mean, does that sound crazy? No, not at all. When we look at the longer time frames, though, it's going to, again, look really bad, because then, you know, on the weekly, we have our high, we have our low 200s, should be a buying opportunity. Obviously, people take advantage of that. 821 bull cross. We come up. Now, we very clearly have a lower high. I mean, very, very clearly. Very clearly. So, if the 821 bear crosses back down again, I mean, that's basically just a signal to the market like, hey, the 200s are not holding. Or at least, hey, we're going to double check. Which, you know, could be nice. Maybe we have a little inverted shoulder, a little head, and then we put down another shoulder right here. It's not the prettiest thing we've ever seen. But, you know, the actual, like, psychology is there. So 30K, you know, it looks like if we break down, if we start to see this bearish momentum pick up. I mean, the bulls had all the opportunity in the world. And honestly, we're doing a pretty good job. I'm not going to lie. And the same thing with the monthly, you know, this was huge. Obviously, the bear cross, that was a big effing deal. We talked about scenario, obviously, how many times that's happened in the past and what that has led to. Typically very aggressive, very disgusting dumps. We were able to capitalize based on some short-term signals and basically buy the bottom on a lot of, you know, equities, cryptos, you know, all kinds of trash. I mean, we went pretty far out the trash curve. I mean, risk curve with some of our trades. But that being said, you know, that was a beautiful move back up to retest the 821. And then we actually reclaimed it on these Dow stocks, these industrials. And that's when we really started focusing in on the top 10 stocks of the Dow Jones, because the Dow was the most bullish. And then we could see inside those top 10 that a couple of them were saying, hey, we're likely going to new all-time highs or already at new all-time highs. And a couple were saying, like, actually, this market isn't that great. And then the breadth overall of the market started to improve. But now here we are again. You know, I mean, this looks terrible. Sure, we're above the 821 for now, but we tested, you know, we got above it here. That's a good sign. Moved up, sold off all the way back down. Support, moved up again, lower high, sold off all the way down. Maybe support. I mean, we've got 5-6 days to find out. Looks like we're going to come down here, retest the 21, 32,666. And I mean, if that doesn't hold, if that breaks, you know, it's this candle, this little, the savior, we'll call it the Jesus candle, because it basically saved the Dow from, you know, probably a disgusting dump. I mean, at least for a little bit. But I mean, if this breaks back down, 821 goes bearish again. Look, as bearish as I was right here for a potential, you know, dump, or at least like de-risking as I was, if we do it twice in a row, it's going to look super nasty. Because that just looks like scenarios like this, where we basically have the cross down, we come back up, we like avert the cross or almost avert the cross, and then we have the bloody waterfall afterwards. Those are usually like the worst kinds of sell-off, because all of the excitement, all of the market just pulling everybody back in right here, and we're getting ready to go back to new highs, and things are good, and the economy's good, and there's no recession, and soft landing, and no landing, and, you know, maybe we didn't even take off and we're in the matrix. Like, I don't fucking know what they're going to talk about. But regardless, I mean, this is it. Look, the Bulls saved the day. We saved it. We did it. Hooray. And then while they're like high-fiving, the game's not even over yet. And then the Bears come in here and start dunking on their face. And I mean, I'm talking about one of those brutal dunks where, like, you know, you're not looking and then you turn at the last second and you get just like the slop. What was that movie? Along Came Polly. He's got no shirt on and just the full like sweat slap of that guy's beer gut down his face. That's what the market looks like it's doing right now. It's getting that full body hairy man sweat slap right into our face while we're not paying attention. I mean, we're not getting it. We're paying attention, but other people aren't. Momentum starting to pick up right here on the monthly too. You know, looks like it was coming back up here to try to do the 821 cross, but if this starts breaking back down, it's going to look like a hard rejection. And maybe for the first time in a long time, I mean, this was 2009 right here was the last time we were inside the bearish control zone on the monthly. And if we get rejected right here, that's probably where we're going. So, you know, again, that's those 2008, the 2000s, like, you know, the real market correction, crash, higher for longer type scenarios. But I mean, we'll probably just go to all-time highs tomorrow. So just scratch all this. Just scratch everything if the market looks bullish tomorrow. I change my mind on everything. And I'm just suddenly 100% bullish. Matter of fact, I'm all in right now, after hours. SPY is next. Okay, the SPY who shagged me over here. Here it comes back down to support. So, I mean, this was the area we talked about. It's got to hold. We know what the squiggly line means. It's a very, very technical area of support. Very, very precise. You have to use the exact amount of squigglies as well. You guys know it's all, you know, it's all there for you. So you all know about that. But descending broadening wedge, breakout, back test needs to hold. We have the ascending, you know, support from the channel. We have the descending resistance. We have the 236 Fibonacci, which is hiding back there. There he goes. Poke his little head out. So this is it. We need to hold right here. We have the 200 exponential and simple moving averages as well. I mean, this is what we call the atomic bomb of clusters, aka the cluster bomb. All right, because this is all of our support right here. And if it doesn't hold us, if we don't hold support right here, I mean, sure, we got a couple stairs on the way down. Slinky theory, we're not going straight to zero. We're going to bounce lower high, bounce lower high. But I mean, it's going to start looking real, real nasty, real, real quick when the SPY is looking like it's getting ready to set up and retest the lows. One thing I didn't mention on the Dow, though, that's worth paying attention to is the knife on both of these. I mean, really on just everything, like dropped extremely fast. Now, here we see the knife went lower. So I'm not saying it has to be like the bottom or anything like that. But whenever I see a super strong knife stab in one direction or the other, I typically will look for scalps off of support. So again, I don't want to like talk all this bearishness and then like be like, and I'm looking for a long trade. But I mean, that's how it works kind of. So, you know, invalidation will be if we break through this support and start letting go, we lose all of this support that we've built. But also that could be the best buying opportunity if we are going to be stronger from here. So, but I mean, obviously everything's going to zero. So keep an eye out for it, but we don't want to get too excited. Let's look at our longer time frames, and we see essentially same thing happening on the weekly. We bounce the 200 exponential and simple. 200 simple is getting ready to cross over the 200 exponential. So basically we're losing momentum on this trend. It is possible, obviously, there's a high probability that we still go to a new all-time high even after that takes place. So we don't want to get overly bearish right now. We do see momentum building on the weekly, but that 821 bull cross right here is being threatened. And, you know, if we start closing back down below essentially where we're at right now, if we continue price action below 400, we're probably going to cross this back down to the downside. We're probably going to threaten, I mean, we are going to threaten 382, and then after that 371, and then after that 357, and then after that, I mean, who knows, a lot lower. And then on the monthly, I mean, this is nasty. We've been talking about the Dow and how, you know, Big Daddy Dow was telling us one story, but the rest of the markets were kind of like, a little sketch. But here, we've got the monthly SPY. And when we look at the 821 bear cross, we tried to save it, tried to save it. Looked like we were going to save it, but it's still technically a cross down. Now, of course, when it's at this level, we could be one candle away from a cross back up. And then it's like, just kidding, all-time highs, let's go. Or we break down from here and we take out the lows and it's like, oh, I told you guys it's going straight to zero. I mean, sure. But the beauty of the 200s is, and the reason I have the least conviction when we're at the 200s is because to me, and to a lot of other people as well, because I didn't invent those. I know it sounds crazy, but there's other people that use the 200 moving averages. Matter of fact, some of them have been using them for hundreds of years, even arguably thousands. I know, that's crazy because the stock exchange not thousands of years old, but apparently people used to trade other stuff like gold, silver, other people, all kinds of like, valuable assets. So that being said, this OG technique right here of treating the 200 exponential or simple as quote unquote fair value means that when we're at this level and we're managing risk off of it, we're basically at an SR flip. So if this acts as support, if we reclaim this area, start moving back to the upside, we have the least amount of risk before we're like sure that our thesis was wrong. Okay, we came up with an idea, we put it into practice via a trade setup, we practice proper position sizing, risk management, and calculated probability of success based on the overall trend. And when all that was said and done, we didn't have to risk a ton to find out we were wrong, which is okay. We're allowed to be wrong. We're not trying to win every time. I mean, we're trying to. Stop. Come on. Of course we are. But we're not going to win every time. We got to be losers sometimes. All right. Just to see what it feels like. Keep us in check. So it's okay to lose. If we're going to lose, though, we want to lose from the support area or from the resistance area. So when we want to buy, we want to buy when we're undervalued, aka much lower. I keep talking about the 200 moving averages, but you know what I'm talking about. On shorter time frames, the 8 and 21 will correspond with the 200s, etc. But realistically, it's more like the fair value or return to the moving averages themselves. So when it's all said and done, the fact of the matter is we're managing risk off of essentially a support level. What is the difference between a moving average and like a horizontal? Well, horizontal doesn't move. A moving average is basically just like a horizontal that moves with price action. So you don't have to use both. You don't have to use either. But if you do, this is a great place to manage risk off of. So that being said, we'll see how it plays out. We obviously have come quite a way down here. There's definitely a possibility that the markets could be bullish a couple months from now and we could be at or threatening new all-time highs. There is definitely a possibility that we're at new lows. And I think that the most important thing right now is to, like, normally you want to have conviction in your trades. You don't want to like get psyched out by stuff, but right now it's good to not have like crazy amount of conviction, because oftentimes, if you're stubborn at all, like me, you may not want to switch your trade from bullish to bearish or whatever because of that conviction. And oftentimes it can leave you behind, cost you money, make you feel dumb. So that being said, triple Qs are next. So triple Qs holding 200 exponential and simple for now. We also have that descending resistance that we would expect to act as support. We also have the green Fibonacci right here as well. We have this little channel that we kind of traded inside of. Honestly, now when we look at it, it's really just the low and like the swing high right here. So it's not nearly as pretty as it was like initially or useful. I'm not sure that it's actually useful at all at this point in time. I mean, arguably like having this down here at the overall like swing low, sure. But the real support is obviously at the 0.5. So we don't really need those anymore. So we'll clean this up a little bit. So that's what we're looking at. This area is a little cluster to hold support, or else potentially we could break down, come all the way back down, retest the lows, and then still find support on the breakout here and go higher. And it's like we just test the bottom over and over again. It looks bad, but somehow, price picks back up. So we don't want to get overly bearish on these right now. But man, losing the 200s on the daily or like the longer time frame moving averages, weekly or monthly, is definitely not a good thing, especially after the bulls had sort of kind of showed up a little bit. So here we have the Russell on the weekly. Again, just managing risk off of the 200 exponential and simple moving averages. Spend a little time below them, spend a little time above them. But realistically, we're just hanging out at fair value. So we'll find out very soon, which direction we're going to be going in. And maybe not. Maybe we're just going to chop around for like a year or 2 years or 5 years and go sideways. Arguably that could be more frustrating or more costly for a lot of people, and that's where we see that time capitulation over price capitulation. So here we see the R nasty, the old ruddy. Looking pretty rough here. Again, very close to crossing the 821 back bullish. And now it's looking like that's likely to fail, potentially going to fail. If we basically go any lower, below 1867 roughly, we likely retest the previous lows. And then after that, you know, there is quite a bit of support right here. We've been talking about that. And now there's a lot of price action. I mean, when you're a trash index and you actually don't put in a new all-time high from 2018 to 2020, like everything else does that's not trash, you end up building a lot of extra support along that range because you couldn't break out to new highs. So you just trade sideways or just capitulate. So that being said, when we come back down to that, that's actually to the Russell's benefit. The fact that it's a trash index and it's full of complete garbage and bankrupt zombie companies is good because it traded sideways so long right here that when we come back down to that level, we have that sweet, sweet cluster of support. So all of a sudden, everything that makes the Russell trash is still trash for sure, but at least like it has some technical support at that trash level if we do come back down to it. So that's what we're paying attention to, essentially the support level right here. If we do get rejected, roll over, very likely we get another pathetic bounce and then eventually just spend, you know, what, a couple months, couple years, whatever, in between this until we catch up with the 200 exponential and simple. And then at that point in time, you know, maybe there's some good stuff in there. I don't know. Probably not. It's probably still trash. And if you don't believe me that the Russell is full of trash, go have a look-see for yourself and then come back. And you let me know if you think the Russell is a good investment. Not talking about money supply. We already did that. Been there, done that. That's right, J-Hoff. You got to be in the group if you want to see how to use the squigglies. They're super technical. You're not going to be able to figure it out on your own. There's some serious hidden Fibonacci techniques in there. So we did DXY, Tesla, so at resistance still, consolidating, looks okay, weakness in the indicator oscillators, looks like it wants to roll back over. I mean, my real target would be to close that gap, and then maybe we come back down here. That's a buying opportunity at like 144. We obviously already busted our nut on that Tesla trade. Very, very nice. You know, and that Tesla trade is a great example too, because I can't remember what trade it was earlier in the year, or maybe the end of last year. What was it that did us dirty? Oh, wait, no, it might have been Tesla every time. At some point in time last year, something did us dirty. I think it was Tesla. And we took an entry on it and it failed twice in a row. And then we ended up getting this beautiful entry right here. And each time it failed, it was like basically like 5 to 7% loss, something like that. And then, you know, once the run up happened, it basically averaged out to like, I mean, almost 100% gains. So, you know, that's why you got to keep at it, because earlier in the year, Tesla had, what was it? We basically exited a trade right before it made a big move to the upside. I can't remember where it was. There's too many of them, Captain. All right, so Microsoft is next. So had a nice little move up here. Looks like it's going to lose the 200 moving averages. Again, this is the exact scenario. You know, it looks like we're going to save the bull market. It looks like we're going to save the bull market. It looks like we're going to save the bull market. Every time it looked like it, every time it failed. Is this one going to be different? Maybe. I mean, earnings, honestly, earnings season wasn't that bad for like the big names. A lot of like the trash, like way down under, of course, was garbage. But overall, I mean, honestly, the big names weren't terrible. I mean, Amazon put up a fat L for the year, but I mean, let's be real. That's probably a lot of like, you know, tricky accounting. I'm sure the execs got paid. Stock options, probably not so much. Apple is next. Again, doing the same thing, trying to reclaim the 200s. Holding for now, looks okay. All these things are losing momentum. All of Magma looks about ready to roll over. None so bad as the googly eyes, though. This thing is looking rough. Now, we do have this ascending support off of the lows right here, which is our white line right there. And then we obviously have the little fib channel. We had to push the upside. Weakness couldn't really get through the 200s to finish out that bull test of the 236. And that measure move breakout. And then again, we came right back down to it, lost it. We're at the heart line now. We're very, very close to the lowest lows, that little ascending support, the 0.5, all that juicy stuff. And you know what? I mean, we did it one time. We did it 2 times. If we come back down here to the 0.5 again, I'm going to buy it. And I'm going to go for the 3rd time's a charm. It'll probably break. We'll probably get stopped out. That's fine. I'm going to still take a shot at it. Because as far as I'm concerned, we're basically just trading back inside that range again. So who puts the M in magma? That's right, it's Meta. So we threw the little short setup on here for the gap close after that little jump up right there. You know, everybody hated Meta. It was garbage. It was zero. It was trash. I'm the only one who still hated it, that still thinks it's garbage and still thinks it's trash. So that being said, the real trade was the short trade to close the gap. We're like halfway there right now. I'm not in this trade though. I prefer not to participate in Meta, although it is in some of the major indices, obviously. So, you know, I mean, it's not, I'm obviously taking a little bit apart in Meta. I mean, I'm floating around in the metaverse when you guys aren't here. It's like me and 30 other people. You're like, how'd your day go? I'm like, oh, it's great. Just hanging out in the metaverse with the other dozen people. So one day, or no, that was Decentraland. I heard something about Decentraland. They got like 30 active users. I remember way back when I grabbed up some Decentraland trash. I mean, way back when, before anybody had heard of it. And obviously it was complete trash. It was just, you know, a speculative bet or whatever. And it went way up, like ridiculous. And then they finally came out, like, this is the perfect example of crypto. Selling someone a dream is a lot easier than actually selling them a product, okay? Because Decentraland, like, had this beautiful, like, oh, the metaverse land and all this trash and everything. It was like way before Meta was talking about the metaverse. Decentraland was like, oh yeah, it's going to be great and all this stuff. And you can buy some land and build an art museum and all this just bullshit. And then they came out with an actual like product or demo or whatever of their world. And I literally like went in there. I mean, watch like just, it took me about 20 minutes to realize that this was about to go to zero. And maybe it won't go to actual zero, but it was the worst thing I've ever seen in my life. It was horrible. It looked like something from an Atari in the 1980s. I'm like, oh, okay, cool, yeah. Sell. So I'm like smashing the sell button as I'm like still like, no, thank you. It was terrible. So yeah, Meta also is trash. I don't know why I was talking about that. Amazon, the A in magma. Got rejected off the 200s, you know, looking much weaker, obviously. You know, when you put up a fat L on like, you know, $500 billion in business, it makes sense that you're probably not doing great stock price wise. But I mean, what does this look like to you? You know, beautiful, juicy, you know, thick gains, massive bull market, and then a straight up death. I mean, basically just gave back all of the price action from like 2018 till now. So we completely round tripped everything. So the truth is, do I think Amazon's going to like go out of business anytime soon? No, they already put everything else out of business. So they're going to do fine. That being said, do we come back down, retest the lows, maybe go to a new low, hit that $79 price target? We probably do. Could it get super nasty and we actually get like another full leg to the downside, take us back down to like the mid 60s? Yeah. Definitely a possibility. I mean, I don't want to hodl stuff when it looks like this. You know, I don't want to hodl in I call this a meltdown, the bloody waterfall, whatever you want to call it. But this is not when I want to be a hodler. I want to be a trader. Because, you know, and even then, the real move is just to be short. You're shorting the 200s, you're shorting the 200s, you're shorting the 200s. So if you were like the absolute perfect trader, the best, you're the best. Let's say we shorted in here at the 200s, wrote it down, you're up 37%, okay? What about if you buy the dip every time and wrote it up to the 200s? You're up 37%, so it's basically even Steven. And then you get the breakdown from here, you know, up 41%. And then what about if you were just buying the dips? Up like 33%. So in all reality, the difference isn't that much. I mean, we're going lower every time, but the percentage gains and losses is roughly the same. I mean, give or take a couple of percent. The real difference is that you have the favor of the trend if you're selling, if you're shorting, as opposed to, you know, if you're buying the dips, you know, the trend is obviously just waiting to go to a new low and work against you. So just think of it as, hey, do you want to be a lazy trader that just gets to take advantage of the market movement? Trade with the trend. Or do you just want to like make life extra difficult and always be fighting the market? By all means, trade against the trend. I do it all the time. It's definitely not the best idea. The probability of success is not the best. But oftentimes the amount of time that you need to be exposed in the market is substantially less. So if we're like, you know, you always hear stairs up, elevator down. That's essentially talking about the fact that, you know, when you're in a bull market, The stairs up, it's like a slow walk up. And then, you know, the elevator down is just a couple day big drop. So market exposure, you know, definitely can be your friend when you're trading against a trend, but that's what you want. You don't want to be just like hodling, because the truth is, if you're in a downtrend, more likely than not, eventually you're headed to lower lows, which means you're going to eventually take the big fat L. So Bitcoin futures, the main thing we need to pay attention to right now, there's really only two things that matter on the Bitcoin and Bitcoin futures chart. And those two things are super simple. We have the big hump right here, and then the little hump, that's bearish divergence. Obviously, we have two red histograms in a row. So once this daily closes, which obviously it's still pretty fresh, that's my indicator. When I see two red histograms in a row or two green histograms in a row, that tells me, okay, daddy's ready to go. That's a swing high, swing low. It's not always the case. Sometimes it doesn't work like that. You get two in a row and then it goes the complete opposite direction. So you still need to be fluid. But that being said, bearish divergence very clearly. Still holding the 200 exponential, 200 simple down here at 21K. And we also have the gap down here at 20K. And you're like, you said two things and that was way more. I know, right? So here we have the spot market. And again, those same two things we're looking at. The big boy right here and the little guy, which is looking like a rejection off of the slope line, which is still blue even after we broke down below it. One of the most reliable bearish divergence signals ever in all of history since I made it up. So just write that down in your notebook. One of the most reliable bearish divergence. Now, could this turn around and then it's like, oh, this red histogram just turned green and now there's a bunch of greens and we're going up and then we're back on top of the slope line, and then what was all that reliability about? I mean, we're right there. We're right at the cusp of the most reliable bearish divergence signal ever discussed in all of history on this stream right now. And then obviously we have the retest of 200 exponential we already did. So that's the next target if we come back down, 21.6. And then after that, it's the 200 simple, which is like right at 20K, which in my opinion would be a buying opportunity. Now, technically, we've been in bear market this whole time. Technically, based on spot, we're in a bull market. 200 exponential and simple are blue. So we should be buying the dips. If we come back down here to 200 exponential, people are going to buy that dip, including me. Okay. So then it's going to start looking like one left shoulder, one head, and then one right shoulder, you know, potentially, obviously, because that would be a resistance area. So we got to watch out for this being a head and shoulders. And then the breakdown, we start doing the measure move. We're at 200 simple. And then next thing you know, we're down here real low, but hey, maybe we're printing a higher low. So there's a lot of things in the market that can make us potentially get bullish based on technicals. You know, we can come up with some fundamental stuff as well. But the truth is, the market's still deciding. So while crypto has actually, and by crypto, I mean Bitcoin only, all other cryptos look like complete trash. You know, STAR for the exceptions, but most cryptos look like trash. Bitcoin looks substantially better than most of them. And Bitcoin actually is building a legitimate case for potential upside. Now, one thing that really needs to happen for that case to be strong, though, we have to sell off and put in a higher low. So sure, we kind of did right here. We kind of like have a series of lows down here and then a higher low. Yeah, sure. Okay. This wasn't really like a scary like sell off or anything like that. I want to see like a pretty aggressive sell off. Like, I mean, I don't want to be overly particular, but like, depending on how we look at this, if we look at, God, what is all this trash? I can't see anything. Here, what if we just do this? Oh my gosh, that's so much better. Oh, and then right afterwards, I get duped by TradingView. First day. All right, so if we just basically go from the bottom here to that first like push up, that was a 236 retracement, which is not that much. Then let's just say this is the whole 5 waves up, 1, 2, 3, 4, 5, whatever. Maybe it's not, maybe we go higher. Realistically, we want to see it come down to at least the 382. The 0.5 corresponds with 200 simple perfectly. So if we come down to the 0.5 here at like 20K, retest that, find support, I'm looking at that as a buying opportunity. Maybe we go lower to the 618 and go higher. The truth is, though, I'm looking for a higher low. And I'm going to be bullish as long as we're above the 200 exponential and simple, no matter how much trash I talk or whatever. That's just how it is. So bearish divergence likely to play out. When it does, I'm looking to be a buyer of support. Do I want to hodl from 24K down to 0 or whatever the new low is? No, not necessarily. but I'm also not looking to like sell into support if we start having like aggressive sell-off. So, well, we can go down to some shorter time frames here and look at this. So for the moment, you know, we have the 200 simple on top, obviously losing momentum. We just poked up to a new high. We have the 821 bear breakdown. We're back testing the level we broke down from. You know, typically we have support, we lose support, we back test it as resistance, and then we go lower, probably headed down here to like that roughly like 23K or so level. So, and then if you want to get really, really low time frames, you know, we were talking about this quite a few times. When the hourly 821 flip bullish right here, that was a beautiful beginning of this uptrend. We talked about this scenario right here, maybe just in the group though, not on stream. I don't remember. I don't usually talk about shorter time frames on stream because it's kind of like time sensitive that you see like a 1 hour trade setup or something like that. So the 821 bear, or the 200 bear cross right here, into the bear market, and then once we reclaimed it right here, we had that nice surge back up, very close to just having that cross back down again. So the same way, obviously, we get bearish here, we get bullish here, we get potentially bearish coming up shortly. You know, and the reason we watch the shorter time frames is because they just give us a better idea what's going to happen on the longer time frames. So ETH on the daily, still just kind of holding above those levels, not really telling us anything. It has like the exact same signature as Bitcoin. Total market cap, hanging out here at the 200s, fair value. Used an awful lot of energy on this move up. Same like we talked about with the DXY. We have bullish divergence. We push to the upside. We use a bunch of energy. We don't go that far. And now it's up to, you know, the market to decide, hey, did we reclaim support and we're going much higher now? Or is this just going to be, you know, we busted our nut and it's ready to go to new lower lows? All right, so Bitcoin dominance on the, this is the Uri thing chart on the weekly. We're basically at the heart line here, getting ready to break out, break up, likely coming back to that 48 level. Nice little move on the indicator oscillator, building momentum. Here we have without the stable coins. Again, we're just kind of building into this little wedge right here, higher lows consistently. You know, it looked like we were going to break out a couple times and haven't quite yet. If we do, though, I mean, that's a punchy move right there. That's like a 10% move on Bitcoin compared to altcoins, not including stable coins. All right. Matic is next. I heard something crazy today. They're like, Polygon's like laying off employees or something like that. I didn't realize that any of these like cryptos or like anything were like actual companies, that there was like people doing stuff for them. I just assumed they were all cut and paste copies of like somebody else's hard work. I mean, maybe that's why the chart looks so much better than the rest of the trash cryptos does. I guess it's like an actual business with employees and there's people like building stuff or doing things. I don't know. I should look into it more since this is one of the primary cryptos that I actually trade. But in the meantime, we'll just assume they're all trash and that it's not really a real company. It's fake. Nobody works there. Let's be real. And if they do, it's maybe like a brother-sister combo working in like mom's basement or something like that. It's not an actual company. So that being said, I mean, it doesn't look bad though. It's still creeping up to the top. Still have the potential for the remainder of that trade setup, the back test of the 786. 200s are still looking good. They are starting to diverge from each other, so the trend is accelerating to the upside. It does look a little bit tired here, but we're not seeing that same level of bearish divergence or anything like that. I think the key thing I'm probably watching here is like this little ascending support line right here. As long as we keep just getting nudged up, that's fine. And it looks good for us to get to that buck, like whatever, 80 level, $1.80. Yeah, and then I guess it's like whenever, I don't know when the earnings are for this because it's like a real thing. I just assumed it was all vaporware. I don't see any of the E's on here, so I don't know. Maybe somebody can fill me in. I'm sure you guys know a lot more about actual crypto than I do. So next is BNB. So yeah, this one is very, very important. We've talked about how this is basically, you know, everybody else is looking at Tether as the thing that's going to bring down the market once Tether is like exposed as being a scam or whatever like theory you have or conspiracy. I mean, it's not really a conspiracy because it's basically true. It just hasn't been like proven yet. But that being said, BNB, you know, another big player in the market, and this is serious stuff happening right here. We're still on top of the 200s for now. Lost 821 cross on the back test right here. Push back up, reclaimed them. Looks like we're about to lose it again. So, you know, same scenario. It's obviously not as like cut and paste as like the Dow with that like crazy kind of head and shoulders kind of set up there. But basically we just have this key support, this neckline, this horizontal, these 200s, whatever you want to call it. That's the support. This thing was nasty for a while and was ready to just free fall straight down to zero or $40, actually 40, not just zero. And it reclaimed the 200s and was looking, it doesn't look great right now. And if this thing decides to break back down and come test 250 and it loses that level, that air pocket, I mean, this could be the thing. Everybody's like, oh, I don't know what the next leg down in crypto would be. All the bad news is already priced in. I could think of a couple things. So let me know if you want a list. The crypto people were very quiet for a while, and now they're starting to get very loud again. And you know what that means. Time to grab the humble bat and give them some beatdowns. And by humble bat, I mean metaphorically them losing all of their, air quotes, investments. They're investors. All right. So unsubscribe, $9.99. Fuck you. That's not funny. Oh, by the way, congratulations to the community or me or whoever gets, I mean, I couldn't have done it without you guys. Let me put it that way. All 9 of you guys watching. Couldn't have done it. Oh, sorry. I estimated a little high. 5. I couldn't have done it without the 5 of you. My loyalist fans. But no, seriously. I mean, it's cool. I'm glad. So, resubscribed. All right. Crypto Trend Hater is left the building. So now we're going to take a look at gold. We got a little request. And then we'll probably wrap it up there. So gold is looking the same. Retesting at 382. Seems likely it's coming down to the 0.5. So low 1800s, high 1700s seem probable. I would expect some kind of support at this level. But let's be real. I mean, it's just top, bottom, top, bottom, top. What comes next? Say it loud. Okay, I'm not going to wait for you because there's like a 10-second delay on this or something. But I'll just assume you said bottom like out loud or at least in your head. So silver, holding on to the 200s for now. Had a nice little move to the upside after we broke out of that descending channel. It needs to hold this area. You know, it looks like it's trying to build up some kind of momentum, some kind of support. Expect maybe like a short-term capitulation wick back down to the 200 simple at $21. And then I think that's probably like at least a short-term buying opportunity. You know, silver was really flirting with disaster down here and then got picked back up pretty nicely. But when it's all said and done, this is that same rejection just kicking silver in the dick every time it gets close. So it's hard for me to get excited about this when for the last 1,000 years, silver has just been getting absolutely crushed by this resistance. Yep. That was the year 11 AD is when this high was put in on silver. It was 11 AD. Right after Jesus died. It's crazy. All right, so GSG is next. Looking pretty bearish right here. I mean, we're at the lows again. You guys know what happens. You know, every time we hit the lows, we just slowly, and then eventually we roll off the table. So, I mean, get ready for the bloody waterfall. I mean, I don't know exactly what's going to happen next, but if I had a guess, it probably, look, if we break down from here, it probably looks something like that, but red. So, I don't know. And then the channel is like not really like that valid. Like arguably, I don't know what the measure move would be. It's sort of like we broke down from like one channel into like another channel. So I guess like we'll be kind of like conservative with the measure move, which is just back to support. So does it go to $18? Yeah, and that's essentially where we're interested in at, somewhere between there and $16.50. You know, maybe we want to buy a little here, buy a little here, buy a little here, maybe. Maybe not. I don't know. Maybe we don't want to buy anything because the markets are going to look like trash very soon. Already starting too. So LNG is next. All right. So this thing, man, I was going to do like a whole video on this and just talk about how it's complete trash, but I just didn't get around to it. So I guess we can just kind of like slander it a little bit on stream here really quick. I mean, most of you guys probably don't care, but we've talked about this and used it as a measure for like the liquefied natural gas market essentially, but like the business portion of it. Obviously, it's not going to trade exactly like the underlying But that being said, you know, I mean, this is like one of the bigger names and everything like that. But I pulled up the three biggest ones: LNG, TOT, and SHEL, double hockey sticks. Yeah, and out of those three, there's a clear winner for one. If you're looking to get into ESG, or I'm sorry, into nat gas, in my opinion. So we're basically like flirting with a bear market already based on technicals. If we jump over here and look at the fundamentals really quick, we'll go to the annual, and 2020 revenue was like 9 billion and they lost 85 million. 2021 revenue was 17 billion and they lost 2 billion. So they went from losing, basically 648 million to 85 million to 2.4 billion. I mean, so it's like, wait a minute. Wow, you guys are really picking up steam in the wrong direction. They're like bleeding billions of dollars, obviously. So Q1 of 2022, obviously the numbers aren't on there yet for 2022 as the year. 7.7 billion with an 865 loss. Q2, 792 billion with a 741 gain. So it's basically balance each other out. They net like minus 120 million. It's like nothing, chump change. And that's about what, 19 billion roughly? Or what, 8? No. Let me check my math skills really quick. Sorry, 15 and a half. And then another 9 on top of that. So we're talking about basically like, let's just round off 25 billion in revenue so far. And we're talking about a loss of like 2.6 billion already. So, I mean, we're already like doing it. You're like, oh, how are things going? Like, pretty good. We're getting ready to beat last year's numbers. And you're like, really? And you're like, how'd you do last year? Well, we lost like 2.3 billion. Oh, shit. Okay. So you're hoping to beat that. So maybe lose like 2 or 1 or no. Like beat it. Like we're looking to lose like maybe 3 billion even if we're lucky. Now that being said, if we look at Q4 of 2021, I don't think that's going to help build our case. If we look at the analyst estimates, they're estimating 8 billion in revenue and $6 in earnings. Last estimate for Q3 2022, it was supposed to be like $5.58 and they lost $9.54. So they were just off by like $15. They were like, oh, we'll probably do like $5 per. And then you're like, oh, how'd it go? Oh, I lost like $9 per. And you're like, oh man, those estimates were pretty good then. All right, so why am I telling you all this? Why do you care? You probably don't. Realistically though, like we don't know what these numbers are going to be. They've been pretty swingy, but it seems like there's a real high probability that, and I'm going to completely destroy the case that I'm about to make right now in a second, but it seems like there's a high probability that we're about to lose over 2.3 billion, which means we're going to do even worse than last year. And obviously we can't really look at the PE ratio on this because they just lose money. So just get ready for that. If the analyst estimates are correct and they come in like on target, this thing's probably going to look disgusting. So be prepared. It might go to 0 tomorrow. Or if counterintuitive, it could just go, what's that, 150 now? Probably go straight to 500 if it loses 3 billion because people will be like, oh, it's on sale. So that being said, let's look at total energy really quick. We're not going to do like the full breakdown. I just want to pull this up because they haven't reported yet either. But we see, go back to annual 2020, they lost like 30 million. Prior to that, they were actually making like, 20 million here, 10 million there, lose 30. And then suddenly 2021, they lost 360,000. So they're getting closer to like the break even back again, the profitability, etc. If we look at Q1, 2, and 3, they basically did net 17, net 6, 23, net 2, so 25 total net already. So if they have another Q4 2021, they're looking at nice positive net. So honestly, looks substantially better. Instead of losing money and bleeding money, they would be potentially having made money. So what is LNG doing that's so terrible? Well, there's a bunch of like actual reasons that they're like losing money right now. But aside from that stuff. All right, now let's look at Shell. So SHEL, Royal Dutch Shell Company, breaking out basically like threatened the highs right here, went slightly higher. This is a long-term I can't remember if we've gone like into detail on this before, but this is like a long-term descending broadening wedge. Somebody came in here when I wasn't looking and switched that arrow around backwards, because I would have never, ever drawn an arrow from bottom to top. I would have drawn it from top to bottom. So TradingView, little gremlins. It was probably me. But anyway, so support, resistance, support, resistance. So this is it. We're trying to get above the monthly 200s. We're trying to get above the descending resistance. We're trying to break out and let Shell go nasty. And I might have said all-time highs, but it's not all-time highs. Obviously, it's cycle highs. So that being said, I mean, this is it. This is the deciding point. I mean, if this thing continues to upside, breaks out, continues on, it's going to be awesome. If not, though, it's got a ways to go. I mean, this is it, though. If you want to manage risk, you want to short, that's your spot to short from. You want to long. I mean, it's not the best spot to long from, but, you know, long the breakout. But that's not why we're looking at this. The main thing we're looking at here is not even like the technicals, obviously. But we just want to look at the fundamentals on this because it already reported. So the other two haven't reported yet. They're about to. We're going to find out soon. Are they complete trash? Are they garbage? Are they little trash? Are they making money? Are they not making money? We'll find out. When we look at Royal Dutch, 2019, 15 billion profits. 2020, rough year, 21 billion loss. And then 2021, 20 billion profits. 2022, 42 billion profits. So they doubled their profits from the previous year. So now let's look at, and I know what you're thinking. You're like, who cares? Why are we looking at this trash? Okay, look, if we look at Royal Dutch, who already reported, we can get a rough idea how their Q4 2022 was relative to Q4 2021. And then also how it was relative to Q1, 2, 3, whatever, if we can get a rough idea where they were. So we just assume that all these companies are equally good or equally shitty. Obviously they're not, but we can get a rough idea profitability wise where this should fall, you know, giving us a little bit of a hint as to what potentially could happen fundamental wise. So we looked at the annual already. So let's look at the quarterly here. So this Q4 of 2022, the one they just reported that we're waiting for the other two to report, revenue was 90 billion. Net income was 10 billion. Profit margin was 11.5%. So historically, their profit margin has varied quite a bit. It was 8.5 Q1. It was 18.5. It was 7. And then it was 11. So it doesn't give us like a ton of useful information. Net income and revenue wise, it was 90-10. Here it was 96-7. Here it was 96-18. Here it was 86-7. So the revenue was pretty much in line with the prior 3 quarters and relatively close to Q4 of 2021. So realistically, we didn't see some massive big Q4 outlier where they like made a ridiculous amount of money or lost a ridiculous amount of money. It was basically just in line with everything. Now, obviously, there's quite a bit of variance within these quarterlies. But that being said, I mean, that gives us a rough idea. Like, we're probably not expecting some like massive, big surprise, like beat or, you know, miss. So if we look at how things have been going for Cheniere Energy, they lost 2.4 billion last quarter. Before that, they made 741 and, you know, lost 865. So, I mean, maybe it's just going to all balance out and they'll just make 2.4 billion this quarter, you know, and it just balances out at like 0. I doubt it though. I think more realistically than not, it's probably going to be like a reported loss of like $1 billion or something like that. Maybe it won't be that high. I mean, but realistically, you know, the analysts are expecting like 8 billion on income. Here we got 9 billion income. So profit margin was negative 26%, which is pretty brutal. Let's say we cut that in half. Let's say they only lose like even more than half. Let's say they only lose 10%. So if they end up with a revenue of 8 billion and they somehow lose 10% of that, we're talking about another like, you know, 800 million loss on top of that. So we're talking about like, you know, negative 3+ billion for the year. I'd just be really, really careful. Really, really careful, because the technicals on this thing are like, hey, we're about to go into a bear market. Like, just give me a reason. I dare you. I double fucking dog dare you. And then the earnings is like, hey, we lost $3 billion this year. Possibly, maybe, probably. So just be very, very, very careful on this one, because this thing could be getting ready to make the big nosedive. But nobody cares anyway, so I don't even know what we're talking about. All right, so on to Mosaic. So Mosaic company, back testing 200 is ready to go into the bear market. It's like same thing. Nothing changes. AMD, we talked about this a billion times. Visa. Oh, let's talk about pot stocks. They're doing something interesting here. So definitely worth paying attention to these pot stocks as they're breaking down to the lowest low ever. Just when you thought the beatings would stop. No, there's always just one more right around the corner. So yeah. I mean, the only thing we can even, this thing is like super technical. You got to give it props here, okay? Because if we go from the macro low to the macro high, we're at the 1.236 hanging out here. Now, I don't know if the 1.236 is where this stops. Maybe it goes to the 1.382, okay? 47 cents. And I know what you're thinking. Holy shit, I've already lost most of my money. There goes the rest of it. I know, right? These things are terrible. I mean, they're definitely going to zero. They're trying at least. 1.5 also corresponds with the 2.618 of this big pump right here. So maybe we see some like little bit of confluence there. Realistically, you guys know the 1.618 is really like, it's either 1.236 or 1.618 for me. The 382 and the 0.5 are useful sometimes, but does ACB go to 17 cents? Probably. You're like, oh, fuck, I'm a hodler. We got a request. Let's look at our request and then we'll call it. Oh, you know what? Actually, before we do the request, let me talk about lumber really quick because we were talking about it a little bit in the group, and I just wanted to like make this point right here. So this is our like lumber chart from April 2020. The futures chart, we just ran up and went absolutely parabolic. So we traded a low on the sell-off at 250. We traded a high when shit got nutty up here at like 1700. 1700. Then it went straight to zero, stopped along the way at about 450, came all the way back up here to 1300, and then went back down and put in a new low. So this is the ABC correction potentially happening. Maybe it's going to turn into like 5 waves down. I don't know. Obviously, very, very bearish. Flip bearish right here. Threatened it, double top, and then very bearish after that. But when we really zoom out on this, this is what I want to look at. Because I think sometimes people lose track of reality. Okay? And the reality is, when I look at this chart going back to like, the early 90s or 80s or whatever, when I look at this chart right here, I say, okay, where did the majority of price action take place? All through here, right? Through all this area. So if I had to put like 2 important lines on this chart, I would put one as, basically like resistance / support here at the bottom in green. And then let's actually flip this one to red, so it's not as confusing. And then this one, resistance, obviously. And the majority of the time, from basically like early 90s, 1992, until we broke above this in 2020. So basically for 28 years? For 28 years, the price of lumber was 95% of the time or more. It was between $225 and $420. Shout out to Elon. So that being said, the most likely price of lumber going forward is, depending on how you're, figuring it out, it's either 40% higher than that, because that's how much money we printed, or it's that same area. So it's obviously not 40% higher because we're back down at that level. So, if we close this monthly back inside of the trading range that we were in for 28 motherfucking years, probably that's just the price of lumber. It's not like rocket science or anything like that. Realistically, you're like, oh, but the supply is down. Oh, but the supply is up. Oh, but, this, that, the other. There's always stuff changing. It's impossible to try to look at like the macro and be like, wood's going to be more expensive in the future because there's going to be less trees. Wood's going to be less expensive in the future because there's going to be more, steel frame buildings, or, 3D printers making stuff out of, liquid cement, or, recycling plastic, melting it down, building giant Lego bricks that people can make houses out of. I don't know what the hell building is going to look like in the future. Maybe everybody just like lives in a little pod and we don't have to build anything, and we all just hang out in the metaverse and there's like cool buildings there. So we don't have to build anything. So lumber just goes straight to zero because nobody wants it anymore. I don't know what the future is going to look like, but I do know what this is telling me. And this is telling me that this thing right here this anomaly, this gigantic M pattern that we have broke down from essentially the neckline, this is clearly, we know what caused that. We know what caused this. This wasn't even just central planning. This wasn't just central planning. I mean, it was a lot central planning for sure. But what really happened that made lumber prices spike? It wasn't just that the Federal Reserve and the governments, pumped out a bunch of money and closed the economy. That wasn't it. Part of what caused this massive spike in lumber prices was lumber yards or like timbering companies speculating on lumber prices. So what happened was when this broke down with that Rona dump and everything, everybody said, oh my God, lumber's going to zero. Nobody's going to need lumber. We have all this lumber, stacked up all over the place. So like, just don't make any more. It's a waste of money. Shut everything down, whatever. And then what actually happened was central planning doesn't work. And all those lumber yards or timbers or whatever, whoever the bottleneck in the system was, all those fucking morons turned out to be completely wrong because their job is not to speculate on lumber prices. Their job is to turn trees into wood that we can build shit out of. But they didn't do that. They stopped doing that because they were afraid what lumber prices would look like and profitability and all that. So the central planning fucked up price discovery in the real life market. And then the people that were supposed to be just doing their fucking job and making a percentage on the wood didn't do that. They speculated. And then that ended up causing this massive spike because suddenly there was massive influx of demand that no one saw coming because you couldn't spend goods. You couldn't spend money on services. You could only spend it on goods. People wanted to build shit because they were stuck at home. They had to build their man shed or what is it? Man cave or their she shed, or they were going to murder their spouse. Whatever the reason was behind it, that's what happened. And then this was caused. So the Fed and, the central planners, government, whatever you want to say, manipulated it. The actual people that are involved in like production speculated, and then everybody was fucking wrong. And the unintended consequences were this giant spike in lumber. And now we're right back at fair value. We're right back, this 200 on the monthly. So we went ridiculously high and we returned to fair value. So that's it. So we're back at fair value. We traded inside this range for 28 years. So probably just we trade back inside this range. So I'll see you at $225 lumber. Congratulations. Now that's just my opinion. Maybe I'll be wrong. Here's another perfect example of the exact same thing is the silver market. There was like, a situation where all these silver guys were like, oh yeah, silver's going to go to the moon because there's no supply and there's all this demand. And so they start charging, stop like selling silver or start charging ridiculous premiums on silver, et cetera, et cetera. They're basically now trying to speculate on the actual price of silver. And, we've heard like some of the big names in the industry talk about that, like Andy Schectman, who, basically like speculated on silver and lost like his entire retirement fund. Like these guys' jobs are not to speculate on the price of silver. People talk about it all the time. Why don't they just withhold all their silver from the mines and not sell it and then wait for the price to go up and then sell it? Well, because that's not their job. Their job is to get the shit and then turn it into the other shit that people want to build the stuff. So that's the problem with being involved in industry. Your job is to take a cut. You get the silver, you sell it and make some money off of it, and then you go get more silver. You don't speculate. And that's what causes this. The combination of central planning, unintended consequences, and speculation from people that are not supposed to speculate. Whether it's via futures, options, whatever, or, just straight up. All right, so that's it. There's my epic rant about wood. Timber. All right, so last asset we're looking at tonight is The Rock. That's right, the guy who winks at you. Actor / professional. Oh, no, wait, hang on. This is Gibraltar Industries. It is not The Rock's personal stock. I'm sorry. That is my mistake. All right, so obviously bear market. Back above the 200s, back test them, move to the upside. So now we have a series of, basically a low, a higher low, a high, a higher high. So we have a series of higher highs and higher lows. So if we look at this on the short time frames, we got something basically along the lines here. Yeah, it looks fairly, probably something like that with just this little fake out, this little spring breakdown that propelled us higher. I'd say that's probably the way to do it. So we broke down pretty aggressively with their earnings. We'll check that out in a sec. Broke through the 200 exponential, almost came down to 200 simple and the bottom of the pattern, and then shot back up. I mean, so obviously the initial reaction was this is worth 0, and then people were like, no, this is great, I'm buying it all up. So they did. They bought it back up to a key level. Is this just market makers moving price back up to exit their positions? Probably. It probably is. All right, so let's go to the longer time frames and take a look at the old eyebrow. All right, so put in a macro low in 2009. Obviously, got plenty of price history back to the 90s. So show a little Fibonacci up on here from the bottom to the top. We started from the bottom. Now we are here. Came back down to 236. Pretty clear resistance on the way up there. So holding above that for now. The 821 are still bear crossed, which is obviously terrible. We were talking about that earlier. We do not want to be in a bear cross in 821. Trying to get back above the 21 if we stay above this level. Basically where we're at right now. If we stay at the area we're at right now, 53, long enough, we'll get the bull cross, and then we can potentially go higher. Hard buy signal, a bunch of green histograms. On the monthly, it looks okay. Looks like people bought the 200 exponential, front ran it a little bit, and they're trying to live the dream. So now let's look at the weekly. So weekly, this is our back test of a 200 exponential and simple. So nice bull trend, breaks down, confirms into a bear market with the back test reversion of the mean. We would expect, this looks like the Bitcoin chart right now, basically. So still blue slope line, still positive movement on the stochastics. Not like crazy bearish divergence or anything. A little bit maybe going to print right here, but nothing like insane. What about internal retrace from the high to the low? So, okay, very, very technical. Obviously, we broke down, found support at the 618, broke down. We see a little bit of confluence at the 0.5, shot straight through the 382, found some support at the 236, and then we double bottom down here. Back tested immediately the 236, back tested the lows, back tested immediately the 236, broke up to the 382. Found support at the 236, pushed back up to the moving averages in 382, came back down to the 236. So more likely than not, we're just going to continue on inside this channel to the upside. Unfortunately, this is realistically a bearish channel. This is a bearish pattern right now. We're basically putting in, and obviously we looked at the monthly chart and, this thing looks like trash. It's starting to show some saving graces, but it looks like trash. Matter of fact, I think they have a tool for this. What you got for me, TradingView? Slap on a little A down here, a little B. Maybe it's here and it's already topped. Maybe it's the 0.5. Maybe it's a 618. My guess is probably the 0.5. And then realistically, we'll probably go lower after that. So this is correspondence at the 236, trying to reclaim this level. If we lose it, the macro 382 is the target to the downside. So about $28. So just like a 50% haircut. Nothing crazy. Before that happens, though, does it go up here to the 0.5? Can it avoid that happening if it gets back above the 200 exponential and simple? This looks like this could be the top right here. Wouldn't be surprised to see it go higher to the 0.5. But more likely than not, this is how this plays out. If we consolidate above these levels for long enough, maybe we could get the push to the upside. But I would be very, very careful on this one. And realistically, when you kind of zoom out and look at this, it does seem like that's probably what's going to happen here. All right, so let's look at the big red E. See what that's all about here. So we'll just switch out to annual really quick, see what's going on. 2020, $1 billion revenue, 64 million, 6% profit. 2021, 1.3, 75 million, and 5.6. And then 2022, 1.4 billion, 82, and 593. So pretty consistent. Not like super crazy through here. So what do we got for this year? So oh, duh. So they actually already reported. So that is 2022. Yeah, okay. So the revenue was 1.34. The income was 75. 1.39. Income was 82. So, that's not bad. It's like a 10% increase year over year. They've been pretty, 2018 was 64 million net income. 2019 was 65 million net income. 2020 was 64.5 million net income. So like, I don't know what people were expecting out of this thing. I mean, it jumped up to 75. That was obviously an anomaly, a big year, 2021. But then it goes to 82 after that. So it's like pretty consistently doing nothing but like good. And then it's like, oh, massive jump to the upside. And then it's like, and now we're just going to consistently rise after that. I mean, that looks good, like fundamentally. I mean, balance sheet, you know, right around 32 is like the consistent level. Yeah, I mean, very, very strange to have that kind of a reaction. I mean, sure, they missed the estimates a little bit. Okay, who cares? That's just some fucking morons that just tell you what they think something's worth. Free cash flow. I mean, how can you be mad at that? 2020 was 76 million. 2021 was 5.3 million. 2022 was 80 million. So obviously, you know, a little shy on the old free cash through here 2021, but you know, right back to where they would be. Yeah, I don't see anything here that tells me that the actual company is not good. I mean, it's trading at 20 to 1. Yeah, so fundamentally, I mean, it looks okay. It actually looks good. Technically, it obviously does not. So that's sort of where like the divergence is basically between the fundamentals and the technicals. And usually when it comes to like short to medium term, the technicals are what play out. So I wouldn't get like overly bearish right here. It looks like, you know, bear market and it's trying to get back in the bull market. But at the same time, you know, I mean, this is a bearish pattern. You know, we basically have a bearish leg in, a consolidation that slowly grinds higher, retraces typically 50% of the move down, which is our internal retracement B right here. And then after that, breaks to the downside. And more often than not, that will be a Fibonacci extension from the low to high. And that gives us our macro 382 fib is the 1.5. Now, obviously, I'm partial to 1.618. Could just come down to the 1.236. But somewhere down here seems like, you know, technically speaking, seems like where, you know, this wants to end up. So, I mean, it's like a 50% haircut. So it's worth paying attention to. So, yeah, that was a request. I'm not sure exactly what your take on that was, like fundamentally or technically. But like fundamentally, I mean, doesn't look bad at all. Like, sure, the E is red. And I'm sure people saw that and they were like, oh, God, the E is red. I don't know what it means, but fuck me. Sell, sell, sell. But I mean, it doesn't look bad fundamentally. Technically, I'd be real careful. I mean, it's starting to reclaim potential bullishness, the trend, all that good stuff. And it looks good. It's constructive. It's not just like going straight parabolic here. You know, it's basically a high, then a low, then a higher low, a higher high, then a higher low. You know, that's what you want to see, just marching up. But also be careful because that's what happens right before the big breakdown. So we did it. We made it to the end. Hoorah. Yay. I mean, is this thing even on? Hello? Testing? All right. I'm about to get out of here. Appreciate everybody tuning in today. It is 9:25 p.m. Eastern Standard Time on February 22nd, 2023. As always, I am Crypto Trend Trader with your midweek market update. Make sure to tune in on Sunday for our market look ahead, 8 p.m. Eastern Standard Time as well. If you just can't get enough of this place and you're just like, oh my God, this is so amazing. I love it. I just want access to these indicators and just everything about this like community seems like so much fun. You hit me up and you can join the group if you want. Man, that was like super hard pitch there, guys. I didn't mean to hard sell you, but JL, appreciate you, brother. Good to see you. So yeah, thanks everybody for tuning in. Gonna go ahead and wrap it up there. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, that was fun.